Now, what is a profit target? A predefined goal that traders must reach within the trading period, if any, because most prop firms will ask you make 8% within 30 days, while some will not give you limits. They will just say make 8%, and anytime you able to make the 8%, then you have passed that challenge. So a trader must make 8% of the initial account balance. Using a $10,000 account, 8% of 10,000 is $800. So if you apply for a $10,000 account, you are expected to make 8% or $800 profit. So if you add 800 to the $10,000 account, you have met the profit target for that account. Now we have trading rules, and these are guidelines and conditions established by the proprietary trading firm that traders must follow during the challenge. We're going to see more of those trading rules. Now we have the drawdown, but this time we're talking about the maximum drawdown limit. And the maximum drawdown limit is the maximum allowable account loss or equity decrease during the challenge. Exceeding this amount will result in challenge failure. For example, if you are given a $10,000 account, you can be asked not to lose 4% of that account or 6% of that account. Now let's check what is 6% of $10,000. And the easiest way to check that is this. We say 6 divided by 100 multiplied by 10,000. So here it is $600. So what it means is this. This is your account given to you. You should never lose $600. And what does that mean? $10,000 minus 600. So it means that you should never bring this account down to 9,400 at any point in time. If this account given to you comes below this amount, you have failed the challenge. That is the meaning of the maximum drawdown. Now we have the maximum daily drawdown. That is the amount you are not allowed to lose in a 24-hour trading interval. The most significant allowable daily trading loss as per challenge rules. This can be a fixed number or a percentage of the equity at the start of the day. If you exceed this amount, it will result in challenge failure. So you should never exceed the maximum daily loss given to you by your prop firm. Now trade size. This is the number of lots traded in a single position. How many open positions you have at any particular time. Most prop firms will ask you not to open more than 5 positions at a time. Others will say don't use more than 10 standard lots. Others will say don't use more than 5 standard lots. So all these are in the rules set by the prop firm. Now risk-free period. This is a specific time frame during which losses do not affect the trading account. Free repeat. This is an opportunity given to traders to retry a specific stage without extra fees. And how does this happen? When all criteria are fulfilled at the end of a trading period except the profit target. For example, if they say make 8% within 1 month, and at the end of that 1 month you are currently at 6% and you have not failed any of the rules, you can be given the opportunity to repeat the challenge. Now we have scaling plan. This is a strategy outlining how traders plan to achieve profit targets and manage risk. Now let's look at account evaluation. That is the assessment of traders' trading results and compliance with challenge rules before granting access to a funded account. This is typically a manual review process after the trader completes the verification phase. Now, funded account size is the initial capital provided to traders upon successfully passing the challenge. Now, this is another important aspect, which is the profit share or split. It is the division of the trading profit between the trader and the proprietary trading firm, often as a pre-established split ratio. Most firms will outline this for you to see before you start. If you look at this profit split, it means you are going to keep 80% and the prop firm is going to keep 20%. That is what it means. So in case you withdraw $5,000 from the prop firm, you're going to keep 80% of that money, while the prop firm will keep 20% of that 5,000. As simple as that. And each time you make a withdrawal, you're going to repeat the same process. You keep 80, the prop firm will keep 20. Now, some prop firm can decide to give you 100% of the profit. It depends on the prop firm you're working with. What is funding agreement? Is a formal agreement outlining the terms and conditions of the funded trading account. Now we have what we call the funding period. It's the duration for which traders have access to the funded account. Now we have forex liquidity provider. A forex liquidity provider is a financial entity which provides bid and ask prices for diverse currency pair. Typically, they are in possession of a large pool of assets. The liquidity provider's main role is to fill clients' order by both buying and selling assets. Prop firms typically trade with regulated liquidity providers in reputable jurisdictions. Now, what is scalping? Scalping is a trading strategy that entails rapid, frequent trades aiming to capitalize on minor price fluctuations within a short time frame, often spanning seconds to minutes. These strategies are commonly categorized as high risk and may not align with prop trading guidelines, potentially leading to disqualification from trading challenges. So one of the questions you're going to ask the prop firm you're interested in is if they allow scalping or day trading, or they can hold the positions over the weekend. You have to ask. Now, expert advisors are robots that trade on our behalf. It's an automated trading software that utilizes predetermined strategies and technical indicators to autonomously make trading decisions and execute trades on behalf of traders. Expert advisors may not align with prop trading guidelines as they lack dynamic human assessment. So before you join any prop firm, you have to ask if they allow EAs. And if they don't, you have to look for another prop firm that allows that if you must trade with an EA. Then what is news trading? Forex news trading is a strategy that seeks to profit from price fluctuations before or immediately after economic news. Economic news are news that are released on a scheduled time. You will know that the news is coming out before the news. So this happens when there is a major announcement about the economy. So forex trading news is a strategy that seeks to profit from price fluctuations before or immediately after economic news and key data release. It bears high risk due to the volatile nature of markets reactions to news events. As such, news trading permissibility is subject to the policies of prop trading firms. So it means that every prop firm does not allow news trading. They expect you to be out of the market during news. So you have to find out with the firm you want to work with before you go ahead. And here we have hedging. If hedging is allowed, traders are permitted to open and hold multiple positions in opposite direction, which is buy or sell, for the same currency pair simultaneously. So some prop firm will allow you to buy and sell, for example, Great Britain USD at the same time. Inadequate hedging may result in high risk. Thus, it is important to check if the prop firm allows the strategy or if there are additional associated conditions. So these are the things you have to find out from the prop firm you want to work with. And most persons don't see these things as being important. They just go ahead, register on any prop firm, and they begin to trade without taking time to see what they hate, what they dislike, and what they allow. So it is very, very important. That'll be all for this video.